Hey, I wanted to make a video today on how to tell if you actually have a trading strategy, or how to tell if you have a trading strategy that will make money over time. Now, this video is geared towards beginning traders out there who are trying to, well, really, this video is geared towards beginning traders in an attempt to salvage you from losing all your money while you're learning. I also create these videos to memorialize some of this information for my kids for when they get older, they'll have something to refer back to. So let's just get into it. You may have heard of trading, trading the markets and how much money you can make. That is true, you can, but it's going to take some work. And it's going to take you coming up with a trading plan, and what indicators you're going to use before you can do that. You know, most beginning traders, myself included, when I first got started, 20 plus years ago, before the electronic age, all we had was what was the word on the street, or, what was published in the newspaper, or, the latest tip from a buddy at work or something like that. Well, that not that you can't make money off of that, but it's going to be. I've learned it's far and few between. What I wanted to talk about today is the concept of backtesting and how you can use that to gain an edge in the market. So, what is backtesting? Backtesting is simply taking a set of indicators, or taking the trading rules that you may have come up with, like, hey, I'm only gonna, I think this is gonna go up, so I'm gonna place a trade. That's not a trading strategy. A trading strategy would be something along the lines of when this indicator does this, or I see this, then I'm gonna do that. And you can use backtesting to see if that idea is sound. You'll need a trading charting package, a software charting package. I use NinjaTrader. Not a plug for NinjaTrader. It's just the one that I use. It's got a $12 a month data feed. It gives me everything that I need to trade to this day. It's the one that I currently use. So when I've got a new idea that I want to test out, what I'll do is open up a chart, put it on a commodity that I normally trade. A couple of my favorites are 30-year bonds, corn, the E-mini S&P, or the Dow. I typically stay away from stocks just because, for me, the price structure doesn't seem to have much structure to it. So I typically trade in the commodities market with futures contracts. So what you do is, once you got that trading software open, let's say I put 30-year bonds up on the screen. I've got my indicators on there, and what I'll do is go back in time about a year and advance the chart one day at a time and look for a trade setup. Breaking that down a little bit further, I trade on a daily time frame because I still work a full-time job, and in my job I can't be glued to my phone or constantly checking on the status of a trade. My outcome is based on what happens on a daily time frame. So when I'm backtesting, I also backtest on a daily time frame. So I'll set the chart up a year back in time, and I'll look at the right hand side of the chart, and I'll look at that first bar, and that doesn't show anything in the future. And then I'll advance the chart one day at a time until I've got a trade set up, and then I'll apply my filters or additional secondary rules that I may have. And if I have a trade set up, then I'll log it down in my trading log. It's a simple process. Here's the date, here's the commodity symbol, whether or not I'm going long or short, what is my entry price, what's my profit target, what's my stop loss, the reasons that I got into the trade, and then I'll advance it again. And I'll continue to advance it until either my profit target is hit or my stop loss is hit. And then I'll log the outcome. And I'll do that for that year. And that'll typically take about 2 hours. So essentially what you're gaining is a year's worth of experience in that stock or in that commodity, testing out your trading strategy to see if it works. What are you looking for? What I look for is, a 90 to 95% win rate over that year. And that's typically what my trading strategy gives me. I can take my trading strategy and plot it on a different commodity and that I may be interested in and test it out on that one. And if I get the same result, then it gives me the confidence that I should be able to replicate that in the future. Not a guarantee, but a confidence to trust the trading strategy that I have so that I eliminate emotion from the decision-making process. Because that is one of the biggest mountains you're going to have to climb. Once you start trading with real money, the whole game changes. All of those emotions start coming in. The trade's going in the direction that you thought it was going. And you're ecstatic. It's normal. You're new. And you may let the trade go further than it should have went because you didn't have a predetermined profit target. And then it turns around on you and gives all your winnings back and you're dejected. Or the trade might start initially go against you and continue to go down and you're losing money, and then you're just hopeful that it's going to come back to the break-even point. You've totally forgotten about money that you're going to make. You're just trying to get back to a break-even, promising yourself that you'll get out if it just breaks even. You're almost trying to will that to happen, and that's a loser's game. So those emotions will, like I said, will be the largest mountain you've got to climb. You have to conquer that. And the premise behind backtesting is to give you the tools to confidently get in and get out of the market based on previous results that you've seen while backtesting. The reason why you backtest for a year is because you're looking for a block of trades. You're looking for the results measured against a time period. Not whether or not it won this week or it won this time, and then jump around and look for, different commodities or indexes or stocks that you can try to find that one scenario where it won. No, backtest over a year, get your win rate up to 85, 90, 95%, and then you can apply that in live trading. That's exactly what I've done. In the early years of my trading, I was just like you. I was searching for that secret indicator or that secret sauce, if you will, that would guarantee me to win. And what I found is there is no secret sauce. There is no guarantees in trading. There's just, the best that you can hope for is that you can come up with an edge that gives you a higher probability that over time you will win. And then if you manage your money correctly, your profit and loss statement will be on an upwards trajectory, and you will increase the size of your trading account. Ultimately, that's the name of the game, is to consistently win money over time. Talking about your profit targets and your stop losses a little bit. What does that really mean? That means that, when you're backtesting, even when you get a trade set up, you should also have a predetermined profit target that you're looking to make and a corresponding stop loss. And that's your risk to reward ratio. That's how you manage your risk in trading. And what I'm typically looking for is a minimum of a 1-to-1 risk to reward ratio, meaning that for every dollar that I'm looking to win on the trade, I'm only willing to lose a dollar. Now that may sound counterintuitive. You may be asking yourself, well, how can you make money with a 1-to-1 risk to reward ratio? And that goes back to that winning over time analogy that we were just talking about. So over a year in time, my trading strategy typically will show me anywhere from, on a bad year, 25 to 30 trades in a year. Typical year is, high 30s. So about 3 trades a month typically is the average. In 30-year bonds where I typically like to spend most of my time. So let's just use 30 trades a year as a simple number. So if I've got a 90% win rate, then I'm winning on average 27 of those 30 trades, 3 of them being losses. And it's a simple math program. It's no different than the casinos in Vegas and Atlantic City. They've got a slight edge. The house has a slight edge, and that edge has allowed them to build those beautiful casinos. That's the same thing that you're looking for in trading, is that slight edge. That's what your indicators or your trading strategy is ultimately designed to do, is that over time give you an edge over everyone else in the market. And that's typically that's the recipe that I've used to become consistently profitable, as a relatively new trader, and have continued that to this day. So if you'll use that same philosophy while you're learning to trade, I know you're going to be successful. The other thing that back testing allows you to do is remove the noise. Not listening to financial news, not listening to the latest stock that's making a big move or a tip from somebody at work. It's your strategy. It's your decision made because you have the confidence that has come from you backtesting that particular commodity or that particular stock, so that at the end of the day, the decision's yours. It's not what everybody else is doing. Typically, the large masses are incorrect anyway. You'll find that out on your own. So just to recap, backtesting I think is the most important thing that a new trader can do to prove to himself or herself that the trading indicators that you're wanting to use will work and will give you that edge. And I will do it over and over again and tweak them as needed until you get to that comfortable 90 to 95% win rate. And then stick to that. Don't jump around to the next, don't have shiny object syndrome. Don't see, somebody advertising this fancy new indicator or pay for, somebody to give you picks, stock picks, or the next company that's, getting ready to bust out. Don't do that. Learn to fish. The old analogy, teach a man to fish and he'll never starve. Well, I'm trying to teach you how to fish. So, if you gained anything from this video, or, if you want to learn more, give the video a like. It tells me that I'm making content that's beneficial. Subscribe to the channel if you want to catch the next video, or if you want to go back and look at some of the other ones. There's a link in the description for a free book that I put together. It kind of outlines how markets move, what I've found over my years of trading that tell me how markets move. It's free. Drop your email address in there. It'll get emailed to you directly. I'm not trying to make any money off this. I'm not trying to do anything but help new traders, because I wished that help was there when I was learning how to trade. I've got younger kids as well, early 20s, late 20s, and mid 30s. That at some point, they know dad trades, and hopefully they're going to get interested in it. So what better place to memorialize these teachings than on YouTube? I don't think it's going anywhere. So with that, I'm going to sign off. Hope you have a great day. See you on the next one.